Some loan types will not allow you the option. You must have an escrow account. But some loan types actually give you that option to waive if you meet certain criteria, most of the time at least 20% equity, but there are some exceptions to that. Have you heard of an escrow account? Do you know what that means? Do you want to know what that means? Well, stick around to the end of the video because I'm going to teach you anything and everything you need to know about escrow. The what, the why, the how, the common misconceptions, and even what are your options? My name is Stephanie Weeks, and I am not sure how it happened, but I have actually been originating loans for 16 years, and mortgages is my passion. I've been recognized in the top 1% of loan officers in the nation for several years running. And this year, 2020, for 2019 production, I'm actually also named in the Scotsman Guide of Originators, which is so exciting and such an honor. Thank you so much for tuning in. I would love for you to subscribe to the channel, hit the bell to be notified every time I post new videos, every Tuesday and Saturday, and please drop me some comments below because I would love to hear from you all. So what's an escrow account? When you pay your mortgage, I always like to compare it to like an auto loan because a lot of people have done auto loans so they can relate. When you have an auto loan, you pay your principal and interest payment based on your interest rate and based on your terms. There's your monthly payment, right? Super simple. You pay taxes, but you pay them the one time on the purchase and you do not pay them every single year like you do property taxes. You also insure the vehicle, right? And so your insurance, you pay that separately, just like you paid the taxes separately from the monthly payment. You're going to pay that insurance separately as well. But these are all expenses involved in having that auto. So let's compare that to a mortgage. When you have a mortgage, if you have an escrow account, what that does is it takes your property taxes, your home insurance, your mortgage insurance, flood insurance, anything that qualifies to be held in escrow, and it allows you to make one monthly payment. So imagine if you paid your car note and you paid your note, and if your taxes were due every year, you paid them every month in preparation for the year. And then if your insurance on that auto was due every year, you paid it every month into escrow, and that way you'd make the one payment. Well, that's how it is with your mortgage if you have an escrow account. You've got principal, interest, taxes, and insurances, right? So you've got your principal and interest based on your loan amount, your loan term, and your interest rate, just like your auto. But on top of that, you're going to have that monthly payment, and then you're going to have escrow on top of that. And like I said, escrows, taxes, insurances, things like that. That is, in a nutshell, basically what an escrow account is. Collected every single month. And that way, when the bills come due, typically once a year, the money's taken from escrow and paid directly to the tax assessor, the insurance company, whatever applies. Really, kind of makes your life a little easy. You're writing one check every month instead of writing several checks throughout the year. Why would you have an escrow account? Well, a lot of people, let me back that up. Most people have escrow because they don't have the option to not have escrow, but we'll get into that in a few minutes. So most people have escrow because they don't have the option. Why does the lender want you to have escrow? That's the big question, right? Why? Why would they want to maintain your taxes and insurances? Well, they want to make sure that they are protecting their collateral, which is your home. And so to make sure that you don't go delinquent on taxes, to make sure that you don't have the home not insured and there's a huge casualty, they would rather handle that money for you to help to protect their asset or their collateral, which is your home. That is the why the mortgage company would like you to have an escrow account. Why would you want to have an escrow account? Well, a lot of people want an escrow account because ease of use. It's so much easier to write a check every month, which you're writing no matter what, instead of writing that same check every month for your mortgage and then having to pay a tax bill that might come out around Christmas time. Mine does, and that kind of sucks. But paying that bill once a year when the tax bill comes out, paying that big lump sum of home insurance when that comes out. A lot of people like the escrow because it's ease of use. They make the one payment, one and done. Do you have options when it comes to having an escrow account? Sometimes. That's the answer. So generally speaking, and most of the time, You have to have 20% or more equity in order to choose to be able to waive escrows. Some loan types will not allow you the option. You must have an escrow account. But some loan types actually give you that option to waive if you meet certain criteria, most of the time at least 20% equity, but there are some exceptions to that. Talk with your loan officer because it does depend on your loan type and your exact loan situation as to whether or not you have the option to waive escrow. What is the top misconception when it comes to escrow accounts? I hear people say, I don't want to have an escrow account because I don't want my lender making money on my money. I don't want that lender earning interest on my money. Well, they don't. An escrow account is a non-interest bearing account that the mortgage company has to facilitate and maintain the taxes and insurances, escrow if you will, on the home. So if you hear someone say, don't have an escrow because they're making money on your money, you can say, nope, that's not true. One of the ways that an escrow account works, which I think is pretty cool, is that we actually build in a cushion into escrow. If you're a homeowner, you know that there are ebbs and flows in property taxes and home insurance. Ebbs and flows. And so by building in that cushion, if your insurance or taxes change just a little bit, that cushion will help to cushion that blow so you don't get a big jump or big change upcoming in your monthly payment to fill that void. So that little cushion is built in there to protect you and to protect the lender. My gift to you today for spending your few minutes with me, which is so valuable, is in the comments below. I'm going to put a link to a free copy of my ebook version, Mortgage Piece, which usually sells on Amazon for $13 a piece. And I'm going to drop that link below in the comments for you just to say thank you. And I really hope you enjoy it. Please give me feedback. I love to hear from you guys. Drop me a comment. Type piece below if you think escrow is a good idea. I hope you enjoyed the video. Check out some of my other videos I'm going to drop here. And thank you so much for tuning in. Let's connect on social media. My Insta handle is _the real Stephanie Weeks.